Good evening, everyone, and welcome along to the IC Markets webinar, The Currency Dilemma, Price Action of Forex. My name's Chloe. I'm a trader based in London, and I will be with you for the next hour or so. For the majority of the time, we will be spending that going through the Forex markets. Any questions that you might have, please do feel free to drop them in the questions box, and I will try to get to as many of those questions as I possibly can. First of all, before we get started, if you want to drop into the questions box that you can hear me okay and that you can see the screen okay, that would be fantastic, just to get a little bit of feedback there. And I would just like to give you an opportunity to read the next slide, which is the risk disclaimer slide. So I'm just going to give you a couple of moments now to read through this slide, make sure you agree with everything therein, and then we will get started with the webinar. Okay, hopefully that's enough time for you to have read through that slide. A little bit about myself then. I've been a trader for 12 years now. I am a technical trader, predominantly trading Forex, commodities, indices, and some other leveraged markets as well. And I am predominantly a trend-based trader. That is where I personally feel the easy money is. So the majority of my trading is using trend-based strategies. The agenda for today then, what we're going to be doing today, we're going to be looking at the price movements of major Forex pairs, including, but not exclusively, Euro dollar, US dollar against the Japanese yen, British pound against US dollar cable, and US dollar against the Swiss franc. We'll be looking at some others as well, and of course if you do have any questions, anything you particularly want me to take a look at, then please do feel free to drop it in the questions box, and if we have time at the end we'll go through some of those things as well. So we're going to be looking at key trends, patterns and potential trades that might be setting up. Now, as I said, I am a trend-based trader, so identifying trend is very, very important to my trading. Even more important than that is identifying levels of support and resistance. For me, I use support and resistance very much in my trading, and that doesn't necessarily have to be for trading setups, but when I do my market analysis at the beginning of each week and at the beginning of each month, I use horizontal levels of support and resistance across most of the time frames. I start on the monthly time frame, and I use that to draw myself kind of like a roadmap of where I believe the possibility for price to go next is, depending on what happens to price over the course of the week. So I'll show you a bit about how I do that and how I have done that for some of the major Forex pairs coming up. And then we are going to look at analysis and the bigger picture across multiple time frames. Now, as a technical trader, it's very, very important for me to not get too kind of tunnel visioned into just looking at the time frame that I'm trading. I do trade several different time frames, so I do a lot of swing trading, so I build positions mainly on the daily time frame for that. But I also do intraday trading, and for that I trade all the way down to the 15-minute time frame. I don't go any lower than the 15-minute time frame just out of personal preference. For me, I find the 15-minute time frame works really well. I don't find it particularly stressful. Whereas I think the lower time frames for me personally, I do find a little bit more stressful. We're not going to really go into which time frames I should and you should be trading, because that really is dependent on personality type and risk profile and all kinds of different things, the time that you have available during the day or during the week. But for myself, even if I'm trading on the 15-minute time frame, I'm always looking at the bigger picture on higher time frames. I will always look at the daily time frame for my intraday trading, and I will always look at the weekly and monthly time frames as well for my trading analysis. So we're going to have a look for sure across multiple time frames, because I feel like that is one of the ways that I use to start trying to eliminate poor trades and make sure that I'm focusing on high quality, high reward to risk, high probability trades, and that is using multiple time frame analysis. So without further ado, we are going to go to the IC Markets platform. So just bear with me while I get the screen up for you here. Okay, so I've got the IC Markets platform up here, and I am going to go straight in with dollar yen. The reason I'm starting with dollar yen is quite simply because I have been trading it a lot lately, because it's been trending very, very nicely. I'm starting here on the monthly time frame. So the reason I'm starting my analysis on the monthly time frame, even though I don't actually take positions on the monthly time frame, but for me it's very, very important to get the most important levels of support and resistance in on the monthly time frame, because the longer a horizontal level has been in place, the stronger it might be, and therefore the more likely price might be to react around that level. So I always want to make sure, and of course it's obviously a way of getting as much data onto the chart, onto the screen as possible. So to make sure I don't miss anything, I always start with the monthly time frame. So the most relevant horizontal levels I have drawn in here, I will just show you where they come from on this monthly time frame. So the level just beneath price here, it's around 123.47, 123.5, around about that area, and that is based on this previous high over here. So the last time that price was up at this level in 2015, that price had a strong reaction at that level last time it hit that level, and so that becomes a level of what had been resistance, but now price obviously has overtaken that level. It now might become support if price comes down to test that level, and it comes back all the way here to 2007. It's been tested all the way back to in fact 1999. It was providing resistance, and even further back over here providing support. So that's a very, very long established level of support and or resistance. So that's the level closest to price that potentially could become support for my trading. Beneath that, there's another level here around 115.75. That level is also based on the monthly time frame. We've got support over here, resistance over here, support back here, very much so. And we can see that around this level there tends to be the beginning or the end of a trend, if you see what I mean. So for example here, this would be potentially seen as a head and shoulders pattern here, and this level, the horizontal level that I've marked in, would be the neckline of that head and shoulders pattern. Once broken, then a strong downtrend ensued, bearing in mind that we're looking on the monthly time frame here. So this is then about 6 months of downtrend following that. And again, once that level was broken to the upside, some uptrend ensued. Once it was broken again to the downside, we then had quite a few years, in fact, of downtrend following that. So it's a strong level, in my opinion, as well. So that's the next level beneath price. And then what have we got above price? Well, we've got the last time price was this high was back in 2001. So that previous high I've marked in as a resistance level. Simply, price has not been that high for a very, very long time. It's likely that any buyers still in the market may have their profit targets around about that level. They may be expecting some kind of reaction at that level. It has been resistance in the past over here as well. That is a potential level of resistance that I need to bear in mind. Above that, it's all the way back here to 1998, this previous high here. That's looking quite far into the future. So those are my most important levels based on the monthly time frame. And then all I do is I go down to the weekly time frame. I'm just going to click on weekly up there. We'll have a look at dollar yen on the weekly time frame. This gives us a little bit more of a closer look at what's actually happening with price action. And this is where I really start to look at what is the trend doing on the weekly time frame. So for me, the most important thing to notice on the weekly time frame is that there is an uptrend. I can see apologies, I'm just noticing the question here. Ali, I really can't apologize enough if you can't understand me. I'm afraid that English is my first and pretty much only language. I do speak a little bit of Spanish, but probably not technically detailed enough to trade in Spanish. But what I can suggest, if you can understand me this much, I can suggest that you do get in touch with the customer service team of IC Markets, and they will be able to help you, because they do a lot of webinars in various different languages. And so please do get in touch with them and they will be able to help you further. So on the weekly time frame, I can see this uptrend, higher highs, higher lows. And that means that I'm only interested in trading long currently on dollar yen. Now, that doesn't mean that price has to go long right now. It doesn't mean that price is going to go up from exactly this moment in time. All it means is that I am preparing to look for a long opportunity. And in order to find that long opportunity, I have to decide where I think price is likely to go next and what I'm going to do when price gets there. And that's where my horizontal levels come in. So I've got this horizontal level here. I might see price pull back down to this horizontal level. And if that happens, then I might anticipate a bounce at that level. And therefore, I might go to a lower time frame to start to see trend on a lower time frame and start to look for entry opportunities on that lower time frame. So that is a horizontal level I am keeping a close eye on. However, on this weekly time frame now, because price has not retraced that far yet, I'm just going to draw in another level quickly, which is just at this previous high here. So potentially there may be some support at that level. It was a previous high. Price hadn't been higher than that for quite some time until just recently. And so that potentially could become a level of support as well. So I've just got a few levels around there. Now, in terms of what I would be targeting or where I would be anticipating price to actually turn around, this point in time here, where this high has been formed a couple of weeks ago, there's no technical reason for me to expect price to turn around there. I've got bullish momentum indicators, so my RSI and my MACD are both bullish on this weekly time frame. I'm not expecting a trend change at this point. What I am expecting is a trend continuation. A pullback is no surprise at all, but I am expecting a trend continuation. And if the trend continues, then I'm looking for it to continue to my next horizontal level, which is this one up here. So if I do find a trading entry on a lower time frame, and for that I'll be looking at the daily time frame, then my target would be around here. Not necessarily my full target. I'm happy to scale out along the way according to strategy, but this would be a sensible area for me to take profits, this horizontal level up here around 135. So on the daily time frame, what I'm looking at closely, I'm looking at a pattern currently. It's not a very clean pattern. In fact, it's quite a messy pattern. But I do, because trend is so important to me, I'm constantly looking for higher highs and higher lows for an uptrend, or lower highs and lower lows for a downtrend. And right now on the daily time frame, actually what I have is I have a lower high here and lower lows. Let me just make sure that everyone is seeing what I'm seeing. So just from here, so from the bottom here, I've got clean, clear, higher highs and higher lows. Okay, then I have the same high up here. So resistance up here has started to form, and then prices come down to make a lower low and a lower high, and in fact another lower low down here. So this to me looks like the start of a potential trend change on the daily time frame. In addition to that, I've got bearish RSI, I've got bearish MACD. So it suggests that the strength of the uptrend is failing at the moment. However, that is to be expected after such a long run to the upside, and the downwards momentum may just take me down to my horizontal level that I've been looking at before potentially returning to the upside. So that's really what I'm waiting for, is I'm waiting for an entry to the upside, wherever that might be. And it could be that it's at this horizontal level just down here, and I'll be waiting for a potential long opportunity there. I'm not going to look any further down the time frames on this particular currency pair, because my priority at the moment is to look for long opportunities. And if we were to go down the time frames, obviously we're going to start to see more downtrends here on the lower time frames because of this pullback on the larger time frames. So I'm not going to look at those. Now, the only way I would be interested in looking at those would be if price breaks down through this level of support here and really does start trending to the downside on the daily time frame. And in fact, for that, I would probably require price to break down through both of these levels of support, so that I've got plenty of free space to trade to the downside if I'm looking at trading short on lower time frames. So for the moment, I'm just looking for long on dollar yen. In answer to your question, George, my moving averages, the moving averages I have here, they're just the 50 moving average, the 20 moving average, and the 10 moving average. So the 50 in red, 20 in blue, and the 10 in black. I'm not using them as a bounce point or anything like that. They're not part of my entry criteria for a strategy. I'm simply using them as a guide to trend. So, you know, if my moving averages are pointing upwards, that gives me an indication that I've got a reasonably strong uptrend. I do also use them as a measure of equilibrium. So when price pulls back and retraces, then when it comes to a moving average, that indicates it's reached an equilibrium point, and it may be ready to go again for the next move in the direction of the trend. So I'm going to move on now. I might have to speed up a little bit if we're going to get through all of the currency pairs that I want to. And I'm going to move on to euro dollar. So euro dollar, again, I'm starting with the monthly time frame just to give you an idea of where I'm getting my most important horizontal levels from. Now, the most important horizontal level for me at this current time is this one here. It's around 1.05. and it's the one that I've drawn slightly thicker. Price has not really been far below this level since 2002, really 2002, 2003. So yes, it has dipped below, we can see that here, but really price has not traded fully below this level for a very, very long time, 20 years or so. So that's a very important level. Last time price was at that level, it reacted strongly. It formed this triple bottom here, and that is a strong potential level of horizontal support. It's also been hit back here in 97, acted as resistance all the way back here as well. So that is an important level of support. I've got one level below that I've just drawn in case that level breaks. I need to know, you know, at the beginning I was talking about building up my roadmap. What I need is if a horizontal level breaks, where could price be headed next? And I'm all the time building a roadmap of, if this happens, where's price going next? So if this horizontal level does break, I need to know what's beneath it. And for that, I have to go all the way back to 1999. But there is a previous low there. It's not a particularly strong horizontal level, but it was tested again in 2001 here as resistance. So that is my next important level below price. I also need to know what is above price. On the monthly time frame, it's this level here at around 1.16. This is a level that has been support in the past and resistance in the past. In order to get a closer level, I'm going to just nip to the weekly time frame here. And this level here has acted as support recently. So I've got this level here, it's around 1.08. This level has been support over here in 2020. It has been resistance back in 2017. It has been also support all the way back through to 2015 as well. I've got another horizontal level of potential resistance above price over here, which is also based on the weekly time frame. It's around 1.14, 1.144 thereabouts. And that is also when we had a strong price range on the euro from 2015 all the way through to kind of 2018, pretty much, price was in this range, and these are the important levels that tracked price. And if price does get back within that range, I would expect it to move in between these levels. So that's why they are on my chart, and I see them as part of my roadmap. So the weekly time frame, again here, I've got a downtrend, lower highs and lower lows. So predominantly, I am looking for potential short opportunities based on my overall trend on the weekly time frame. Now, price is currently coming up to approach this previous low here. So I've got to be aware of that this level that price is currently at is around about this previous low, and it's heading back up towards this next horizontal level of potential resistance. Where am I going to find my trades? Well, I will be looking on the daily time frame for my trades, in the first instance at least. And so I am looking for price currently. It doesn't look like it's turning around anytime soon. We just had a pretty strong day of trading today. Excuse me. So I'm looking for price to head towards this horizontal level here around 1.08. That also happens to be this previous low here, and it also happens to be around the area of the 50 moving average. So quite a steady equilibrium point that we can see price has reacted to quite a lot in the past. So on this daily time frame, this is really the area that I'm looking for price to return to, and if it does, then I will be looking for price to turn around. That's where my price action in terms of candlesticks will come into play, because I'll need to see some kind of indicator that price is turning around at this 50 moving average. So I'll need to look at individual candlesticks and find a bearish candlestick or a seller controlled candlestick in order to have more certainty that the sellers are returning to the market and this downtrend might continue. Can we predict trend, Sarat? Brilliant question. Can we predict trend? A couple of answers to that question, actually. Can we predict trend? Well, yes, in that trends go on for longer than we might think. So if we can already see a trend on the chart, we can predict that it is more likely to continue than change direction. Can we predict with 100% certainty what is going to happen with price in any given moment? Absolutely not. No. The market will do what it's going to do regardless of what levels you've drawn on your charts, regardless of what you think the trend is, regardless of which direction you're trading. The market will still do what it's going to do. All we can do is build up a strong enough picture of analysis that we have an edge in the markets, and we can say price is more likely to go in this direction than that direction, therefore I'm more likely to have success as a buyer than a seller, etc. So this is why the market analysis is so important, because no, we can't predict every market move, but we can give ourselves an edge in the market and increase our probability of success over a period of time. So with the euro dollar on the daily time frame, I am predominantly looking for a return to the downtrend. Now, of course, there can be moves against the trend, and there will be moves against the trend for sure. And on a lower time frame, that could look like a different trend. So I'm sure if I were to flip to a 15-minute time frame here, I would see an uptrend, and there it is. Very clear uptrend on the 15-minute time frame there. However, I am very cautious when trading a lower time frame against the direction of a stronger time frame trend, so a daily trend or a weekly trend. It is possible, and absolutely, if you're an intraday trader, all I would say is you would have to build your roadmap based on lower time frames still. So if I were to want to trade this on an intraday basis, I would be looking at chart patterns. So for example, here on the daily time frame again, highs and lows, lower high there, lower low, lower high, lower low, and then here, if we analyze this candlestick by candlestick, I actually have got a higher low forming here, and price. Now I've got my neckline here. Price has exceeded this high, it's broken through here. Where could it be headed next? Let me erase my scribbles. Where could it be headed next? I will need to draw another horizontal level. And my horizontal level, I will certainly be taking note of this area here, a more conservative note of that area. But this distance between where price currently is and this next potential horizontal level, if we go down to a 15-minute time frame, there's the potential for a reasonable reward to risk trade. Now, especially because we can see here an ascending triangle pattern here. So we've got the horizontal level of resistance, pretty much where price currently is, and we've got these higher lows creeping in here. So that's suggesting that the sellers are running out of steam, the buyers are poised and ready to take over the market. There could be a potentially strong breakout from this level. It could go all the way up to there, depending on how conservative you are with your stop loss. But even if you were to put it right at the bottom of the start of that ascending triangle pattern there, that's almost a 2-to-1 reward to risk trade, which is perfectly decent reward to risk. So it absolutely is possible to trade on the lower time frames against the higher time frame trade, and in fact, as an intraday trader, you may have to do that sometimes. I personally find the best trades are those that do go with the direction of the overall trend, when all things are stacked up in my favor, when the weekly trend is long, when the daily trend is long, when the 4-hourly trend is long, then I might look for an hourly or 15-minute trade long, and when everything lines up, then that's when I get the highest reward to risk opportunities. But it doesn't mean to say there aren't opportunities intraday, such as this one here. Okay, so moving on to, let me just check questions. Okay, Tony, yeah, so Tony's question is, when should I decide if the price will go up and break the 50 moving average or will make a rejection and return bearish again? I assume that you're talking back to the looking at the daily time frame. So the question is, when will you know if the price is going to go through this 50 moving average or make a rejection of that 50 moving average and return to a bearish trend again? Brilliant question. When will you know? Well, what I would be looking out for would be, I would be looking for individual candlesticks. So for example, just over here, we can see this, what we call a hammer, or I mean, you could call it anything you want. The important thing is that it's a bearish candlestick. It's a candlestick that shows that price opened near the low, the buyers pushed it up but failed. So it tested that moving average, tested the 20 moving average there, and it comes all the way back and closes near the low. So that's a rejection there. And that's what I would be looking for at the 50 moving average. I would be looking for a rejection candle of some sort. It doesn't have to look exactly like this. You know, this one here is what we would call an engulfing candlestick, and a bearish engulfing candlestick, and that also would be an adequate signal for me to show me that price is rejecting that 50 moving average and potentially returning to the downtrend, or rejecting the horizontal level, more importantly. What is the safest strategy to do intraday trading? How long is a piece of string, to be honest with you? I just don't have time to teach you a strategy in a 1 hour long webinar, unfortunately. In my humble opinion, I can't teach you a strategy, but I can tell you that in my opinion, the safest way to trade on an intraday time frame is with the higher time frame trend. So this is why I focus on my market analysis on. I start on the monthly, I do weekly, I do daily, and I would say 90% of my intraday trading, if not 95% of my intraday trading, is with at least the daily trend. And that is what I consider to be the safest way of trading intraday, with the daily trend. And Tony, yes, that is correct. If there's no rejection near the horizontal level, if price comes through, and yes, a rejection at the 50 moving average. Now, I want to be careful about talking about rejection at the 50 moving average, because I don't use the 50 moving average as a point of entry for my trading. I focus more on horizontal levels and areas. But yes, if there is no rejection at the level that you are looking for a rejection at in terms of candlesticks, then potentially price will break that level and continue bullish. And in which case, that is where it's important to find the next potential horizontal level that price could react at. If we're talking about intraday trading, I'll be looking around this area here. We've got this previous high, previous low, some resistance around here, some support previously. So that's the next area that I would be looking for price to reach up to if it were to break this horizontal level here. And in which case, then I would again go down to the lower time frames, because by that time I'm starting to see a bit of an uptrend on a daily time frame. If price were to continue upwards, you know, if price were to break this level and potentially come and retest it and then carry on, then absolutely in this period here, there may be lower time frame trades to the upside that can be taken. Another question here, assuming price is consolidating on the daily time frame and is trending on the 15-minute time frame, is it advisable to enter the trade? In my humble opinion, no. If it's ranging on the daily time frame, that's another matter. You know, if I've got a large range, for example, from let's just say price is going to range from here to here to here to here to here. This is you you know, that's a large number of pips. And in between that time, there will be trends on the lower time frames that can be traded. So a range on the daily time frame, yes, that can be traded on a lower time frame. However, consolidation on a daily time frame, consolidation to me is more like this period over here. So that's more like consolidation, just a kind of pure sideways movement on the daily time frame. That is likely to be very choppy to trade on a 15-minute time frame. Now, unfortunately, that does mean that for this period of time, we're on a daily time frame here, so this is probably like a month and a half or something, I can't trade the euro dollar, because if I'm not going to trade while price is consolidating, then there is nothing for me to trade on euro dollar. And that just means I have to move on and look for something else to trade on a different currency pair. It's as simple as that. So unless you want to become a specialist in trading one currency pair and one currency pair only, in which case it's likely that on a daily basis you will have more intimate information about or intimate analysis about where price might go. But I think in terms of what's advisable, all I can tell you is what I would do. And in a sideways market, in a consolidating market, I would just leave it well alone personally, because I'm a trend trader and I'm looking for strong trend trades. Another reason for that is because I look for high reward to risk positions, and I'm not likely to get a high reward to risk position here. What I will do is I will look at this consolidation, I will mark out the support and resistance levels, and that will become my roadmap. I can't trade this in consolidation. When can I trade it? Well, I can trade it when it breaks out either direction. And that means I can be prepared for that and ready for that. So I might not trade euro dollar for a whole month, but as soon as it breaks out of the consolidation, I'm then looking for my strategy entry with the trend. So hopefully that answers your question. Okay, let me just delete my scribblings and we'll move on to dollar Swiss. Dollar Swiss on the monthly time, again, I've got my roadmap here of horizontal levels of support and resistance based on the monthly time frame. Strong support down here, strong resistance up here. So those are the levels that I've marked that are closest to what price is currently doing. And I noticed that price has recently, this month, just bounced from this strong horizontal level of resistance. So then going down to the weekly time frame, I noticed that actually dollar Swiss has been in an uptrend. It's broken through this horizontal level most recently, raced off to the upside. It's hit its head against this next horizontal level of resistance, and it's currently coming down. It's coming down quite steeply. Where am I looking for this move to the downside to end? Well, I'm going to look at the daily time frame to decipher that. And on the daily time frame, what I've got here on the daily time frame might not be massively obvious, but if I just draw in my highs and lows very quickly here, it's a very not a very standard, but it is if we look at the highs and lows, we've got left-hand shoulder here, right-hand shoulder here. If we draw in the neckline, oops, terrible drawing, draw in the neckline through there. Price has broken down through that neckline. So that's looking very bearish now for me on the daily time frame. I'm no longer looking for long opportunities here on the daily time frame because that's now pulled back a little bit too far for me. If price comes down to this previous high level over here, so the reason I didn't have all of these levels drawn on at the beginning is because I don't like my charts to be too messy. Depending on what time frame I'm trading, I add horizontal levels as I need them. So this is basically the next horizontal level that could be relevant to me. I'm anticipating potentially price could come all the way down to this level here. There's another little bit of support around here, not particularly strong support, so I'm not going to draw that in. So I would love to see price come all the way down to this horizontal level here, and if it were to do that, then let's have a look on, for example, the hourly time frame. Hourly time frame, I can see a nice downtrend here, so potential for trades all the way down here on the hourly time frame. Again, that would be slightly higher risk trading because we don't have a very well established trend on the daily time frame, but on an intraday basis I would be looking for potential short opportunities on certainly on the hourly time frame and lower, if not 4 hourly time frame as well. Over here, 4 hourly time frame, not fully in a downtrend, but yeah, actually, I would be happy to trade this short on a 4 hourly time frame as well. I do have enough space down to this horizontal level. And because I've got lower highs and lower lows on the 4 hourly time frame, lower highs and lower lows on the hourly time frame, this is where time frame correlation comes in. That means that I would also be happy to trade short on the 15-minute time frame as well, as and when that downtrend continues. But I would be very, very cautious about levels of horizontal support because overall this has been in a strong uptrend for quite a while, and it has only really just broken out of that uptrend recently. On to cable, the British pound. So here again on the monthly time frame, I've got a strong horizontal level of resistance up here. It's around 1.42. My strong horizontal level of support around 1.20. So those are my two hard levels of support and resistance, kind of bracketing where price currently is. And then onto the weekly time frame, I can start to draw horizontal levels that are slightly closer to price here. So I've got another strong level of horizontal resistance based on this weekly time frame at 1.34 or thereabouts, and I've got another level that is pretty close to where price currently is headed, or could be headed, and that is around 1.2268 or thereabouts, and that's potentially where I'm seeing price headed towards. So on my roadmap, where is price headed? Well, I believe that it could get up to this horizontal level here. So on the daily time frame, that is, it looks very similar to the euro, and pound often does look similar to the euro. So this horizontal level here, that's where I would be looking potentially for price to bounce and return to the downside. It doesn't look as nice as the euro. The reason it doesn't look as nice as the euro is because there's nothing else. So there's no moving average there. It's just the horizontal level I'd be looking at, and price would kind of be in this no man's land of having pulled back too far for my sell zone here with the 10 and 20 moving averages, but it hasn't quite made it up to the 50 moving average yet. But nevertheless, that is the next horizontal level that I'm looking for a potential reaction at. Past that point, it would be here, because this is the last time. This was a descending triangle pattern. We had downtrend, we then had horizontal support here and price descending down into that and kind of consolidating into that horizontal level, and price then broke strongly out from that level. I would anticipate that if price makes it back up there may be a reaction at that point, and it could be a bearish reaction. Certainly anyone buying the market would be looking to take profit, or at least some profit off at that level. So on an intraday basis, if I'm looking at price action here, let's go to the 4 hourly time frame, because we can start to see price looking bullish on the 4-hourly time frame. I wouldn't be trading long right now because this horizontal level here is too close, but where I would be looking, I would be looking for potentially that level to break, be retested, and then potentially trading up to that next horizontal level there. So that's something that I'm potentially looking out for on an intraday basis on pound. Moving on to Aussie dollar, and another question, brilliant question. Is it good to use a stop loss when placing a trade? Absolutely. I never trade without a stop loss. It's essential to me. Trading is not about knowing exactly what's going to happen with price from one day to the next. Trading is about risk management. It's about managing probabilities and reward to risk. Okay, so if we don't understand our risk and if we don't manage and control our risk, we will never be successful as traders. I can almost guarantee you that. Risk management is so important. When we enter a trade, we must know what our worst case scenario is. What are we going to lose if the market goes against us? And for that, we must place a stop loss. We must know where that stop loss is going before we enter the trade. And if that stop loss is hit, we're out of the trade for a predetermined loss. And that is the way that we preserve our capital. Because we will lose trades, absolutely we will lose trades. You might have a strategy with a 70% success rate. That means that out of every 100 trades, you're going to lose 30 of them. And you don't know when those 30 trades are going to come. If you get 10 of them right at the beginning and you didn't have a stop loss, then you're pretty likely to wipe out an account. So absolutely, yes, you must trade with a stop loss. How do you determine the stop loss? That depends on what strategy you're trading, and unfortunately I just haven't got time to teach you a strategy. What I would say though is a lot of my trading, so let's go to Aussie dollar, continue with Aussie dollar. On the weekly time frame, I'm looking at bearish price action. I wouldn't necessarily call this a strong downtrend on the weekly time frame, but I'm certainly looking at bearish price action. However, price has just hit and reacted from this horizontal level here. So I am cautious about that. But let's say, it's not the best example. Where could I find a good example? Okay, let's say I was trading this bit of trend here, and let's say that I was trading this candle. This is a daily time frame, so this is a swing trade for me. This candle, this is a bearish engulfing candle, and it has come up to meet a bit of a horizontal level here. So I've got a little bit of a level of support here. It's been resistance here, resistance again. It's also in my moving average sell zone here between the 10 and 20 moving averages. So let's just say I'm using this candle as my indication that price is in a downtrend and it has now returned to the downtrend. Okay, so downtrend here, lower highs, lower lows. Price has moved upwards, it's pulled back up, and then this candle here, the bearish engulfing candle, that tells me the sellers are back in the market. There's the potential for this trend, this downtrend to continue. I want to sell this market. Okay, so in that case, I would simply have an order at the bottom of the candle and my stop loss would go at the top of the candle, because that candle is what's telling me price is going to go down. So if price does go down, I want to be in the market. If price doesn't go down, and in fact it comes up here, I don't want to be in the market. So if price comes up there, then of course I want to be stopped out of the trade. I don't want to lose any more money than that. So that's a very brief example of where I would put my stop loss. What is an accepted percentage risk? Most professional traders that I know trade no more than 1% risk, 1% of their capital at risk. Now, if you have a small account, it might be tempting to trade at a higher risk, but believe you me, when you're a managing account in the millions or hundreds of millions, 1% risk is quite large. So most professional traders that I know use 1% risk or even less in terms of the account. Remember, it's about consistency. It's about taking those 100 trades and winning 70 of them. And if you're just trading at 1% risk, but you're winning 70% of your trades, that is going to be a profitable equity curve. So let's move on to Kiwi Dollar. Kiwi Dollar has just reacted again at this horizontal level here from all the way back in 2015. Horizontal level of support. Price has just reacted at that point. It is in a downtrend on the weekly time frame. I've got lower highs and lower lows. It is pulling back currently. Now I have got another. So this is my previous level, previous low level here. It's been a little bit of a level of support over here. That is where I'm looking for price to potentially pull back to. So on my daily time frame, if price were to make it back up to that level, then I would be looking for some kind of reaction. Having said that, that is almost 100% retracement in terms of where price came from here. So here's my downtrend. If price pulls back all the way up to that level, that is pretty much a 100% retracement. So I would expect and anticipate some kind of reaction there, but it might start to look like potentially the formation of an inverted head and shoulders. And perhaps if that level then gets broken, there could be some long price action there in the not too distant future. We'll have to wait and see what happens around this level as to whether that could be tradable. Moving on to, I think actually rather than rush, I'll probably miss out the next couple because I don't see any actual trading opportunities, particularly here on Singapore dollar or Canadian dollar. So I'll probably miss out that couple. I don't want to rush. I do want to have time to answer your questions and also look closely for more potential entries in terms of, or not potential entries, but we haven't talked an awful lot about chart patterns. I hope what I have spoken about has kind of resonated with you and given you some food for thought, because I would say in my trading, the most important thing is horizontal levels. The second most important thing is trend and price action, by which I mean, do I see higher lows and higher highs, or do I see lower lows and lower highs? So that's the second most important thing for me. Third most important thing for me is candlesticks, the price action in candlesticks, because that is telling me exactly who is winning the battle between buyers and sellers at any one time. And that's important for my trading entries in terms of my strategy. But another very important thing is chart patterns for me, because chart patterns also tell me what direction price might go next. And it might not necessarily be, they might not be textbook chart patterns. But for example, here we talked a little bit about consolidation. Now here we have a horizontal level of resistance, and we have higher lows running into that. So that is a very, very extended ascending triangle. Now, can I trade when the daily time frame is consolidating? Well, yes, I can, but no, I won't. I won't trade when the daily time frame is consolidating. So all of this time here, I'm not trading. but I am noticing that there is a consolidation pattern here, and a consolidation pattern has to break at some point. I don't know when, but it has to break at some point. And what I do know is, more often than not, when a consolidation pattern breaks, especially if it's one that has been forming over a long period of time like this, it can break very strongly. And if I'm ready for that, then I could pick up a trend here right at the, I could pick up a trade here right at the beginning of the trend, which means I can enter a trade on the daily time frame around here, and I can enter again perhaps around here and around here. But I can also enter intraday trades, all of this time here trending upwards, that on the 4 hourly, on the hourly time frame, uptrends as well, all based on having done my analysis and noticed the chart pattern here of consolidation and preparing for a breakout. So being prepared is key to successful trading, in my opinion. And what too many novices do is they jump into trends once it's already too late. You know, if you enter a trade up here, you might get stopped out. You want to try and catch them at the beginning of the trend to give you the best reward to risk and the highest probability of success. How much capital do I recommend to start off? I'm not a financial advisor, so I cannot recommend any amount of capital to you to start off. What I would say is, if you are, when you say starting off, if you're a beginner trader, if you're learning to trade, I would start with a modest amount of capital. Now that will depend on your financial situation. You know, if you're very wealthy, then maybe a $10,000 account doesn't sound like very much money to you. Whereas if you're on a $30,000 a year salary, $10,000 might seem like too much to you. So it really depends on your risk profile, and I can't advise you on that, I'm afraid. Okay, so that brings us pretty much to the end of the webinar. Let me just take you back very briefly to the slideshow. Bear with me while I get that up. Because if you do have any further questions, then I'd like to leave you with these contact details. And thank you so much for your questions as we've been going through. I really do appreciate it. And apologies to those of you whose questions I haven't managed to get to. But if you do have any further questions, then you can contact. They've got a fantastic customer service team. At the end of the phone, there's the phone number there. Email, contact details are there as well. You can follow them on all of the socials or get in touch with them on the socials. And what I would say is, if there's anything that I haven't covered today that you would like to see covered, drop them an email and we will be more than happy to do a webinar specifically on that topic for you if we get enough requests for it. So thank you so much for tuning in, guys. I hope you found it useful. And I really do hope to speak to you in another session in the not too distant future. Have a fantastic evening. Let's speak soon.